Good morning, everyone. Welcome to our Wednesday morning trading session. Let me get the screen share going on. The market's opening with a substantial opening gap after a rather lackluster morning yesterday. The bulls got it in gear in a big way and rallied the market right into the close. The overnight a little bit quiet, but still just steady progression higher. And now we find ourselves opening with about a 20-point gap, which is big. That's a big gap for the NQ. So of course everybody is expecting the stock market to reset. Everybody I talk to says, "Oh no, the stock market can't possibly go higher. It's running on fumes." And every time I hear stuff like that, it just reminds me how my friend used to say, the big money is always on the surprise side. So let's not be too surprised if the market continues higher still. Crude oil a little bit lower. Here's crude oil on the Eagle. And you can see that we've topped out a little bit, had a nice little test of the extreme here. This is yesterday's session. Came down, gave us a trend change signal. Now we're challenging the lows. But crude oil still more or less sideways. You see, we're just kind of waffling here for the last little while, back and forth, back and forth. Although, at the moment anyhow, they are more bearish. And as you can notice, I've got the fancy new color coordinated trade manager in play. So if you're still running the old trade manager with the grayed out buttons through here, Anthony has added some colors to make the buttons more distinctive. And this download is available at the members area, so you can go there and download the new Raptor. Or, pardon me, not the Raptor, the trade manager. And I'm so happy that he chose different colors for each button. So what I would like to see, the market is obviously strong, but I would like to see a little bit of a pullback, perhaps to the hard edge here on the Eagle and the Raptor. maybe a hard edge bounce signal, maybe a soft edge sell signal. All right, the hawk going a little bit sideways here at the moment. Well, we might be getting a late filter entry signal here in the Falcon. The problem with this trade, I think, is not so much the directionality. I think, overall, we can probably expect the stock market to continue pressing higher. Short term, however, well, our trend line is since turning red. Oh, there we go. We're right on the cusp here. So we may have a late filter entry signal. The problem with this trade becomes, where do I place my stop? So the signal is going to print somewhere around here near the high. Where do I cover? Well, ideally, you cover below here. And you can see that's going to be out of reach. So that means I either increase the risk amount or I wait for a better entry. There are some trades, folks, that you should avoid because they're going to cost you too much money. The setup is not ideal. And, sometimes those trades will take off and make huge moves on you. Here's a similar situation. We have a trend change signal here on the Falcon. And you're looking at this trade and it's the same thing. Where do I cover? Now, in hindsight, you can say, oh, well, I'll just cover it right here. And the market goes higher and no problems. And to be fair, most times the DTS system, including the Raptor, is very good at picking up market momentum. But the correct stop is way down here, or even below this swing right here. This is the kind of stop that's going to give you enough staying power. Because honestly, at this point, you don't know whether or not the market is topping out. This could very well be a test of the extreme. Yes, it's very strong. Yes, it will probably head at least high enough to hit your profit objective. But there is, well, I was going to say there's nothing worse. There's lots of things worse. But it's very annoying to place an order like this, have the market bring you in, and then start reversing against you, testing your stop, and then reversing and heading higher, which happens all the time. So the challenge for us is to stay out of harm's way long enough to realize a profit objective. I don't know if you realize this, but almost every trade can be profitable if your stop is far enough away. Well, yeah, see, Francisco says, well, how about just using the default ATR 2.618 as your stop and letting the trade sort itself out? Yes, but again, to my way of thinking, if I'm going to risk $300 on a trade, uh, stop losses, to my way of thinking, are like that children's game of tag. You don't want to get tagged. You don't want to get brought in, stopped out, and then watch the market go on without you. Sometimes the default stop is the programming stop is a little bit too tight. Now, looking at this, you can see it followed the market very, very well. And even from here, it continued higher. But let's go back a couple of days. Let's say we took this signal right here, and we put in our default ATR stop. Market brings us in, stops us out, and then goes higher without us. So you've already incurred a $345 hit. What would happen if you took that same trade and you looked at it and you said, well, maybe I'll run my stop down here. The risk amount is almost the same. The only difference is now you realize a profit instead of a loss. So it's a balancing act, to be sure. And there's no one right answer. And people criticize me for leaving a very, very deep stop, but dollar-wise, my stop is not abnormal. Position-wise, it's very deep. But again, I'm just trying to avoid getting stopped out. Same situation with what we have now. I could buy in here, and if I could, here we'll have to change the manual mode because I won't be able to afford this. If I can buy in here, and let's say I'm going to leave my stop, and we're just going to go to the extreme here. If I leave my stop way down here, the chances are really, really good. Now, we're talking probabilities now. The chances are really, really good if I leave my stops below yesterday's lows that I will probably hit my profit objective before I hit my stop loss. It's probably be like a 99% trade. Or certainly in the 90s, maybe not 99%, but certainly it's in the 90s, that buying the high, I'll at least see the market drift a few ticks higher, hit my profit target before we see like a 70-point reversal, 75-point reversal. So the odds are very, very strong. But of course, who's going to run a stop like that? I heard of a fellow, didn't know him personally. He was a friend of a friend who was a rancher. So he was intimately familiar with the cattle market. And feeder cattle were going limit down day after day after day. And he was buying options. He would buy options on feeder cattle, and the whole time it's moving against him. And by the time feeder cattle turned around a few days later, he was probably $1 million in the red. But he was not stopped out, right? But he absorbed $1 million loss. And then when the position turned, I think he made an extra million on it. So the market turned, which he knew it would because he knew the fundamentals of the market. And then the market went up, and he ended up making an extra million, recovered his $1 million loss, and added $1 million for his trouble. All right, here comes the counter trend signal now. Now, the counter trend, the advantage to the counter trend is that we know where to cover the trade. The advantage of the counter trend is that we know we can cover the trade above the high. Because it is counter trend, however, I would probably only take a single contract, so I've switched into manual mode. I think we're going to see the market try to get into the gap. I don't think that's unrealistic. I think a move here to the hard edge is totally plausible. This is a risky trade, though, to be sure. In fact, what may be advisable is to take it below the low of the morning rather than take it on the hash mark here. Take the signal below the low of the day. Yeah, sorry, Tony. Tony says your, your audio is off. I'm thinking I'm going to be a little bit better off taking it below the low of this bar. Let this bar form. I'm using my handy dandy logic counter to gauge the size of the bar and know where to sell. And like I said, there's a big gap down here. I could be more aggressive on my profit objective. In fact, I could try to 51.19 quarter. We'll remember that. We'll bring it down here 6 points to 51.13 quarter. See if we can't encourage it a little bit lower. We're at the top of the hour or near the top of the hour. And this is a bit of a fishing expedition because, like I said, the market insanely strong, but we are getting a counter trend signal. Just making a couple notes in my trading journal. Oh, Jeff says, Eric, I don't have the same look on my Raptor chart. What's your sensitivity setting? I think I'm still on the default here. Yep, it's just the defaults. And my data, I also believe, yeah, it's still 24.5. Okay, Elmer's also asking, can you show your settings? I just have the default settings. I haven't changed anything. And my data, once again, is I've got 10 days loaded and default 24.5 for the session template. I won't do this because I'm in a trade, but you can try reloading your Ninja script. I like this. Francisco's looking at a daily chart for crude oil. And he says it's stuck in this trading wedge. I I think it's great when you consult a longer term chart to try to get a better feel for the short term. And you're absolutely right. You can see just this sideways consolidation for about the last 2 weeks. The market essentially stuck in a range. Well, the bigger range is there. The short-term range is right there. This range we can make some money on. There's, if crude oil decides to rally to the top end to go up to 56, that's, a $5 move. We can certainly make some money in there. All right, so I could have used a second push entry on this as well. Certainly entering below this reactionary bar would be favorable and more predictable. Elmer says I've reloaded everything and have the same settings, and I have don't have the same signal. Elmer, I'm going to have to refer you to Ben. And if you can shoot him an email. If you have tech questions like that, unfortunately, I'm a little bit limited with my tech ability, but please do send an email to Ben. He may have another suggestion for you. Tony's saying, Eric, I just checking, after downloading Trade Manager 6.1, where do you place the new file? You load it just like any other program. So you go here, you go to Utilities, import your Ninja script, and then find where you put the Trade Manager file. And it will overwrite the existing Trade Manager. You will have to reboot your NinjaTrader for it to become effective, however. Francisco checking a few more daily charts. He says the YM also breaking out after consolidating. So here's the YM, and you can see the obvious sideways pattern that held the market for most of December and most of January, and now it's trying to trade higher. The NASDAQ is going to look very similar. A slight upward skew, but still sideways consolidation. The E-mini also. So you got that sideways drift and then the poke higher. The question is, are we going to see it filled out the little gap first? That's what I was looking for, and it looks like they're going to give me a little spank here for my trouble. So if I manage to ride out this attempt to break the highs, I'm going to become a little bit more aggressive with my exit orders. Come on. Well, we're holding in, but just barely. All right, well, we're trying. We're trying hard to hold those highs. What's really important is that we take out this low, this 51.24 area. Francisco's asking, what's the link for the news and the daily recording? All right, well, the recordings first, and I apologize, but I'm going to refer you to Adam on that one because I don't know where he's putting it now. I believe it's at the YouTube channel, at the Indicator Warehouse YouTube channel. That's where the recordings usually end up, and bear with me here a moment. I will get you that. So here's the YouTube channel for Indicator Warehouse. And just checking the date stamps. No, it hasn't been uploaded recently. So he may be putting them somewhere else now. But you have to drop him a line. And the link for the daily, the news, well, there's several you can use. At Indicator Warehouse, at the, stop it, at the home page, if you scroll down to the bottom, you'll see there's a link for an economic calendar. And of course, you can bookmark the page for easy reference, and it will tell you the reports that are pending. Another popular one is Forex Factory. And they show you the reports that are coming up today as well. And I'm going to get hit here in a second. Come on. Yep. All right. So they're not quite ready to reverse yet, obviously. All right, just scribbled a couple notes in my journal. And we're just kind of flip-flopping here a little bit. Oh, there you go. Elmer says it's in the owner training area. Yeah, see, there you go. Elmer says, looks like it was lucky I didn't print that signal. What I should have done, because the market was so sideways, is I should have actually opted for a second push on the signal. Namely, allow the signal to engage, then enter below the low of that bar, or ideally even below the low of the morning. Again, just the sideways nature, or the upward to sideways nature of the market. Shemek asks, how do you activate the red-green vertical line with the active bar? Okay, I think you're talking about this one right here. This is tied into the Geiger counter. This is, I think the Geiger counter calls it the bar envelope, but whatever the technical term, it gives you the short-term bias of the market at a glance. So right now it's neutral. When you see it turn red, it's suggesting that the bias is short-term, a little bit more bearish, and then of course when it turns green short-term, it's a little bit more bullish. Francisco, good call. Francisco says we've got a long signal here on the hawk. That's actually a first micro-macro cross signal, and I think that might have found its profit objective. There we go. So a nice little first micro-macro cross there on the hawk. Tony's asking, Eric, are you not going to do the free Wednesday room for a while? I think next Wednesday we're going to bring it back, kind of the public access to the room. I do believe that's the plan. Boy, you guys are just full of questions here this morning. Jeff's asking, what bar size for the E-mini do you use on the hawk? Well, here's my E-mini. The E-mini, unfortunately, is that popular market that falls outside of the default parameters. So we go to our alternate settings, which means we have a 4-tick hawk, a 4-tick falcon, and a 6-tick eagle. 4, 4, and 6. And the easy way to remember that, that's the telephone prefix for Moose Jaw, Saskatchewan. There you go. You'll never forget it now. It seems the markets that trade at 12.50 a tick, we need the smaller brick size to accommodate them. So that means markets like the E-mini, soybeans or wheat, if you follow those. Occasionally, $10 instruments that just don't move a lot during the day, like the Canadian dollar or the Aussie dollar. We're still in a holding pattern. I do believe that gap is calling to us still. And my failed Raptor trade may have been a good example why, you don't place your stops right there. Had I placed my stops, say, above the next support area, I would still be able to hang on to this trade. I will entertain another short, by the way. I'm not convinced yet that I was actually on the wrong side of this position. I would love to see another little retest here, come back with another sell signal. I just can't help but think that gap, which is like this, isn't beckoning the market. Well, that's the question, isn't it? Mr. Buckaloo asks, since you've traded above the second resistance line, are you thinking we could or should hit the third, given the strength of the Dow? It's obviously it's a real possibility. Generally speaking, when the market starts trading above the median line and the primary resistance, and maybe I'll go to the Raptor here because or pardon me, the Falcon, because they stand out a little more. Once the market gets up in this region, it tends to be more bullish. And yes, my next target would be here at 51.42.5. But I don't know. I got in the back of my head, I still got that opening range gap. And now, of course, the gap doesn't need to fill today. That's the problem with gaps, is that the market may very well fill tomorrow, or maybe even the day after. Unfortunately, this morning is like yesterday morning, where the market is just content to go sideways, and it isn't until the afternoon that it decides to pick a direction and go somewhere. But the fact that we're not getting much follow through right now suggests that maybe the buyers weren't as strong as they let on when they first broke out. Maybe. Maybe the market's just slow. Yeah, Francisco said we're getting another signal on the hawk. Unfortunately, it doesn't fall into our high probability category. Remember, with the hawk, we tend to focus on the higher probability signals, which means that we tend to look at, where are you? We tend to look for these signals here. So things like the first micro-macro cross, the macro pullback, the 4-arrow consolidation, the post-consolidation pattern, and the red bar buy, green bar sell. Now notice these other signals, even though we didn't take them, still had follow through to them. It just seems that these are the higher probability ones, the ones that catch the momentum when it occurs. So right now here on the hawk, yes, it is true we are printing a signal, but it's not really falling in that category. So if you chose to buy here, you could expect a little bit more sideways drift. It may develop into a 4-arrow consolidation, maybe a macro pullback, maybe even a red bar buy before it finally chooses to rally. If it chooses to rally. Oh yes, Ryman, thank you for the reminder. Ryman says crude inventories at the bottom of the hour. Stephen asks, please remind me what key I hold to move the chart up and down. I believe it's you hold the control key and then grab your left click on the price axis and you can pull the chart wherever you want. All right, while we're waiting for things to shape up there, let's take a look here at crude oil. Well, if we're going to bracket crude, it's obvious to me that the support is down here. Where am I going to try to buy it, though? It does look like we got a trend change signal here, our soft edge buy. Right now, things looking a little bit more bullish. Suppose we could try to buy above the overnight high, short below the low, or maybe to be safer, I'll buy above the primary resistance, short below here. That's another 20 cents. That's not too terrible. Oh yes, and I want to set a stop right here. Stop limit ticks. I'm only going to allow them 3 ticks slippage. That's enough. And I can adjust these. Oops, wrong button. I can adjust these as the trade goes on. I want to buy stop limit. There we go. Now you need to remember these orders are live once you put them on your chart, so you don't want to place them too close to the current action. We'll set that over there. Still waiting for another soft edge sell signal here to develop. Yeah, Andrew, you're right. Andrew says the crude inventory can change everything. And I think part of the reason the market's been consolidating in crude oil is this could be an influential inventory report. And yes, Daniel, you are correct. Daniel says, should you enable a trailing stop? Yes, you are right on that. I think I might go with the parabolics. And they're usually pretty good at capturing profit, even on fast moves. So we'll see. We'll see whether the parabolics can do a good job of holding me in. The market's still struggling here. So we got an itty bitty little swing here at 51.28.5. So there's obviously some buying support there. Well, they are just stuck. Is there an FOMC meeting or something scheduled? Because this is very, very unusual. Or I haven't checked the news. Is President Trump doing something today? It seems the market is on pins and needles, wondering what's going to go on. That's how, this is characteristic of an FOMC report when the market is undecided. All right, we've just got a couple minutes before crude inventory, so I'm going to sneak this over here. You know, the thing you can do as well when you recognize the market is this sideways. I forget about doing this. Have I got a minute? We can do a OCO order here also. We can short below there. We can buy above here. All right, here's crude oil now. And they're off. This bid-ask bar is going to go crazy here in a moment. You can see the numbers relatively small. We're going to see these spike here in a second. There they go. Saw some 40 lots going through, some 30s. Quite a few 20s, 25s. Okay, now it seems we've got the range for the inventory. It's still really quite tight. If you wanted to be more aggressive, you could play this hard edge bounce that we're seeing. Here comes another hard edge sell. And if we get a bull bar forming here, what I'll do is I will adjust my entry to enter below the low of this support zone. So far, it seems like a rather lackluster report. Tony's asking, I thought you were long on the hawk. No, I'm not. I was pointing out, Francisco was asking about the signal here, the second signal that we had. This was the first micro-macro cross signal right here. And then Francisco was asking about this one here. Wow. If that wasn't the one of the most lackluster crude inventory reports I've ever seen, I don't know. Yeah, like Andy says, non-event of the year. You got that right. Well, you can continue to bracket that, looking for a possible breakout, but I don't know. I think we may be better off just waiting for a proper signal. We are getting so much action here on this current price level. So where are we sitting? 120, 51.28 half. Just look at the volume going through on these bars. Oh, Stephen says apparently the British Prime Minister is visiting the White House today. How long have we spent? So let's see, that's 7:18. Wow, almost 20 minutes waiting for these last couple three bars to unfold. Crude oil still bouncing around sideways as well. Yeah, this is definitely the kind of day that requires a deeper stop, although I would love to see another retest and failure of this high. The Raptor come back with another number two. That would be a wonderful shorting opportunity. And what it would do is it would build off of this number two. It essentially reinforces the earlier signal. And I really regret keeping that stop that tight. That was an error, which I'm making a note of in my journal right now. Because if I had kept my stop, say, up here, let's say I initially placed my stop right there. This swing right here tells me that the sellers are trying to recommit to the market. So that still gives me an opportunity to bring my stop in. Versus what I did, place a tight stop, and I have no second chance, right? The market trades a couple ticks too high, I'm done. So I needed to take a little bit more of my own advice on that trade. Because if the market turns now and trades through this high, well, then there's a pretty good chance they're going to try to go higher still. At least a little bit higher. Yeah, I'm getting a few comments here from everybody about how the market is just stuck, and comments like frozen. And this is odd. This is odd. This is like when we get those really big FOMC reports and the market will just be dead flat for a couple days prior. Yeah, good for you, Ryman. Ryman says, I didn't take the trade because the market was going sideways. The best course of action, of course, when you recognize the market is stuck in a sideways range, allow it to get outside that range and then look for the signal. And likewise here to the upside, allow it to get outside of this trading range and then look for a signal. That's the better play, rather than trying to second guess what the market's going to do. Now crude oil putting in a bit of a rally. Here's crude oil once again. So breaking the top end of that range. Nice little rally so far, up maybe, what are they up? 100, 200, about $200. Good question here from Peter. Peter asks, it seems like the market has made a new high and doesn't know what to do. Does no follow through have a negative bias? Usually, yes. Because what will happen, and this is what I'm waiting for actually, what will happen is the market will make a new high and then it will fail. Right? This is what I'm waiting for. I'm waiting for the failure. I'm waiting for the retest of the high, the retest of the extreme, and the failure. Once I get that failure, I'll have a pretty good idea which way the market's going to go. Maybe not long term, but certainly short term, we can expect a counter move. Until we get that failure, though, it's still a buyer's market. As unlikely as it may seem. Andrew says, each week the crude report shows too many barrels of crude oil, yet they drive prices higher. And since when has an inventory report had anything to do with the price of crude oil? It's never about the report. It's always about the perception. That's why trading reports is so tricky. And they'll always fit the news to what the market is doing. So if the market perceives, and this is true for grain reports, crude reports, any kind of economic report, if the market perceives level X, but it actually gets level Y, well, on the surface, level Y may appear bearish, but if it's not as bearish as the market was expecting, then it's actually bullish. You can see this can become a real mind-bending exercise. It's all about what the market perceives. So yeah, they may actually be getting inventory may be higher than what it was the week before, but it's not as high as traders were expecting, so they rally the market. Yeah, Andrew's right. Isn't it laughable? Yes, it is. You know, we can't beat Goldman Sachs. We can't beat Bank of America. They're smarter than we are. They have access to information that we don't have access to. They have much faster executions and much deeper pockets than we do. So our sole defense is to try to trade on the same side as they are trading. And so that means for us looking for clues, you know, like the high, the retest, the failure. Now we can say, okay, now we've got an opportunity. Now we can look to short. I've mentioned before that very often the signal that makes you the most uncomfortable is probably the signal that's going to have the greatest follow through. Yes, absolutely. Jeff says if you can't beat them, join them. It's like yesterday. Here, I'm going to close this trade out for a moment. It's like yesterday when we're getting these hard edge bounce signals. Like, honestly, would you feel good about buying that hard edge bounce? I wouldn't. Well, actually, this one's not so bad because at least there's enough room in here that you could say, well, you know, I've got a chance to hit my profit objective before we retest the highs. Okay, so that one not so bad. This one, however, also a hard edge bounce, a number 3 signal. That one does not look promising, and yet it was a prelude to a much, much bigger move higher. So here we are again. The Raptor not giving a signal, but here we got a nice trend change signal here on the Falcon. We got the with trend signal here on the Eagle. And they just keep plodding higher. And I'll admit, it is not easy taking those signals. That's why, we use the trade manager. That's why we try to cap our risk. I remember when Ray Burke and I first started working together, he'd be looking at a signal and he'd say, well, what do you think, Eric? Do we take the signal? And my answer was always, can we afford the risk? If we can afford the risk, we take the signal. So there's a trend change signal. If I put my stop down there, no, I can't afford the risk, so I don't take the signal. If I choose to place my stop here, yeah, I can afford the risk, so I take the signal. It becomes an exercise in money management, not in trying to predict whether the market's going to go higher or lower. And it could be that, that's going to take a lot of pressure off of your trading. When you stop trying to second guess what the market will do, trust your signal and concentrate rather on managing your risk. You can say, okay, high probability signal. I'll take it. I'll put my risk down here. If I get hit, okay, I get hit. At least I haven't lost more than I can afford. And remember, there's almost always at least one more opportunity to adjust your position. So while your risk may start here, let's say this bar finishes bullish, there's absolutely no reason you couldn't consider bringing your stop in here. So whereas you initially had 300 at risk, now you have 100. Well, if you take a $100 hit, if this is 2%, that's less than 1% of your trading capital. Those are not the types of signals that are going to decimate your trading account. Yeah, Francisco says a nice trend line going way back. And there they go. They just keep pushing it a little bit higher. There's no real lean to the market, though, this morning. That's, I think, what's making it a little bit more difficult, too. A lot of times we'll see prices favoring the buy side or the sell side. We're not really getting that today. If anything, the whole morning session has had a slight, upward channel type flavor to it. balanced right now. Need to see at least, you know, a decent leg higher or lower. A decent little push one way or the other. That will open things up for us a bit. And I'm still not convinced the market isn't going to try to get into that opening gap. I'm sorry. Sometimes I get stuff stuck in my head, and it skews my thinking on the day. And not always to my advantage. Yeah, maybe. Francisco says maybe later today it'll fill. The thing is, too, gaps don't need to fill the same day they form. It may not fill until tomorrow or the day after. But there's always a case to be made for both sides of the trading equation. Well, they're still grinding away here. We'll give it a few more minutes. Here's, speaking of trend lines and such, here's a interesting little tidbit. You know how we highlighted the market kind of in this kind of channel? And trend lines, of course, subjective to a degree. I suppose that would be more accurate. Now, you would normally think a breach of the upper end of the trend line is bearish, wouldn't you? Or, pardon me, bullish. But it's not. Believe it or not, an overshoot of a top end of a trading range tends to be bearish. Bullish activity tends to develop here at the bottom trend line, and bearish activity tends to develop at the top trend line. So there's your little fun trading fact of the day. They're still pushing though. All right, boys and girls, I don't think we're going to miss too much here. If you're long, you may as well stay long because it does look like the market's going to trickle at least to the next resistance area, which is 51.42.5. So that would be my big objective on the day. Otherwise, keep your stops handy below this little swing, maybe even high enough now to get them into a break-even type situation. All right, then I'll catch up with you tomorrow and we'll do it all over again. We'll talk to you soon. Bye for now.